Here is a question for you. Do you remember the great stock market rally of 2021? I bet you do. It was the biggest stock market party I ever experienced in my whole life. It had its climax in November 2021, where basically everything was at an all-time high. It really didn't matter which asset class someone was looking at. Everything was just high, 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 and as high as it could get. Even Cathie Wood got awarded in 2021 for her outstanding performance with her funds in 2020. Some of those funds increased their value about 151% in a single year. And what was with Warren Buffett? Berkshire Hathaway was growing too. Slow and steady, as we all know, is Warren Buffett's theme. Even real estate prices were skyrocketing, and cryptocurrencies, guess what? All-time highs all throughout 2020 and 2021. What was equally impressive was that creative new investment structures and ideas appeared out of nowhere. Did you hear the term meme stock before 2021? I didn't. Learning that one of the best stock market research tools is basically a Reddit group called Wall Street Bets was also something very exciting and new. Then there was this thing called SPAC, Special Purpose Acquisition Vehicles. Billionaires and millionaires put money in a company with one single purpose: to buy another company, not even knowing which company or which area. Usually it's the other way around. You look for a company, and when you find it, then you invest in this company, and not a stepwise process. First in a listed company and then in a not listed. The thing is, with all this creativity on the market, creativity in finance usually appears right before markets crash. In my opinion, this is what we saw in November 21. It was the peak of probably the longest bull market in history. It started March 9, 2009 and ended somewhere in November 2021. We will see what happens now. But one thing is for sure, the markets are correcting since then. And when I look on the internet, everybody's talking now about a bear market, recessions. I also believe that private markets are down. They simply have one advantage. They are not so easy to track like public markets, where you have prices set every single day. Especially when I look on the market, the Chinese companies have been beaten down tremendously, not only since November 2021, but also in the months before. There is this, some call it trade war, ongoing between the United States on one side and China on the other side. And the regulatory authorities in the United States very often threaten to delist Chinese companies if they don't comply with the US auditing rules. There is this deadline, I think it's somewhere in 2024, where the Chinese companies have to fix that. And investors in the United States and in Europe basically became fearful and sold their investments. So when I look at companies like Alibaba, for example, the company peaked already in October 2020 with about $300 per share and is now down to about $100 per share. Same when I think about, for example, Tencent is another company that's very interesting. It also peaked in 2021 around September with about $100 stock price and now is about $50 time of recording of this video. Pinduoduo is now basically down to about $30 to $40. The Chinese companies listed on the US stock market in a year almost lost 50 to 70% of their value. The big question here is this now a buying opportunity, or are we coming close to doomsday and the companies get delisted pretty soon? And of course, all investors fear that they will lose all their money. What's the right action right now when we look at this development? Should we throw all money on Chinese companies or simply run away and invest somewhere else because there is no future for those in the United States? Whenever I have a question that I can't answer, I look for role models on the market for people who are already successful. And when it comes to investment, I basically try to find on the internet investors that I believe to be successful and observe how they react to certain developments on the market. And one of those investors is Kevin O'Leary, Mr. Wonderful. Kevin O'Leary is a Canadian investor who sold his company for $3 billion in the 90s, became an investor afterward. He's well known for his roles in Dragon's Den and the Shark Tank, where he judges startup ideas. Entrepreneur, build companies, investor, build an VC fund, and also looked at a ton of startup ideas. I think this guy knows what he's talking about. His net worth is estimated at $400 million. On YouTube, he often voices his opinion to certain developments on the market, and he has also an opinion on Chinese stocks. So to repeat it, what's the risk assessment of Chinese companies currently? They have a lot of regulatory headwinds. They need to have auditable reports in US standards latest by 2024 or they get delisted. But what I think is interesting is that the stock price declined about 50 to 70% in a couple of months. And economically, the Chinese economy is still one of the strongest in the world. It will grow, and there is all the will of the Chinese government that China becomes the economic and innovation leader in the world. Is this an opportunity or not? Listen to Kevin O'Leary and his opinion on Chinese stock. Enjoy the video.
Yeah, Meituan, think of Uber Eats in Asia and China. That's basically what it is. It's growing faster than Uber. Anytime you get an analyst calling stocks, multi-billion-dollar market cap stocks, growing in an economy that's larger than ours, or growth rate is, uninvestable, that's a buy signal. That's what that is. Those stocks were crushed today after being already slaughtered. So they're down another 7 to 9%, the three that I just bought today. Now, I'm not sure I'll catch the bottom here, but you have to make a fundamental decision. What's been against China, the headwinds for Chinese stocks, all of them, is the ADR structure. To understand that basically the law's been changed on them. They've got basically 24 months to get their audit act in order, or they're going to get delisted stateside. Now, even if that were to happen, which I think it's not going to happen, they're going to fix this before that does, it doesn't stop the growth rate of these companies. There's, yes, a lot of people in China. So if you're trying to figure out how do I invest in an economy that is probably going to be the world's largest economy in X number of years, look, I know we're competing with them, but that doesn't mean I don't invest in it because I can't get growth like that. And these are the big names there that already have the distribution systems in place. So I'm sort of indexing it that way. Now, you have to hold your nose on vol. You can't put the full position on here because today you may want to start thinking about the 3-day trading rule. To get Alibaba, to get BABA down 7% in 1 hour, that's hard to do. That's a very large market cap stock. So thank you, analyst guy. I appreciate that. But at the end of the day, they're still going to grow. And that's why I bought them.